Federal Reserve officials led by Jerome Powell are currently adopting a, quote, waiting and watching approach after implementing 3 interest rate cuts last year. They aim to observe further declines in inflation and assess the economic impacts of the new federal policies, particularly tariffs, before considering additional rate reductions. In an interview with the Associated Press, Austin Goolsbee, the president of the Fed's Chicago branch, he expects that inflation to decline and thinks that the job market is stable. If tariffs don't worsen inflation, rate cuts could resume. Additional takeaways from the interview. Officials are waiting for more clarity on inflation trends and potential economic impacts of federal policies like tariffs. What is the Fed's primary concern? Inflation control remains a priority. The Fed wants to ensure that inflation continues to decline without economic disruptions before making adjustments. What would prompt a rate cut? Well, if inflation continues to ease and tariffs don't create significant cost increases, rate cuts may resume. What challenges do they face? It's difficult to determine whether inflation is due to economic overheating or one-time cost increases from new policies. This complexity requires more time before making further rate decisions. What's next for interest rates? The Fed will continue monitoring economic conditions before confirming any additional rate cuts. Essentially, they're staying cautious, ensuring they don't cut rates too soon or too late, and trying to balance an economic growth with price stability.